Oh, ladies and gentlemen, thank you, thank you once again for putting up with our technical delays. If you're part of our first stream today, thank you very much for joining us in the second stream. If this is the first time seeing it, well, welcome. Today is January 22nd, 2024. My name is Tom, otherwise known as Striking, here in the digital media world, coming to you from a temporary studio here. After the first one went up in flames, figuratively.
Flames.
We got in the background here, we got Pedro Garcia, and then we got our guest coming to us today from Dubai, Anton Golub. I'm just gonna cut right to the chase here, everybody, and say, everybody, oh, that was the wrong screen. This screen. What's going on, Anton? What's going on, Pedro? How's everybody doing today?
Good, man. Things are good.
Awesome.
Good. Well,
Awesome.
why don't we quickly, Pedro, get this started by you just going over BTC a little bit more. Oop, my camera just fell over, and and we'll go from there.
Excellent. So, like I said before, when it comes down to it, we got sell pressure coming in. Yeah, you have a lot of people buying. And the fact is that for whatever reason, it's not privy to us to see if shorts are stepping in. The shorts are actually coming off. We know that buyers are buying BTC, okay? Yet we are in a downward pressure where the market is pushing the market down. So in this narrative, what they're doing is they have a sell buy algorithm where it's like they sell buy, sell buy, sell buy. And what they do is they synchronize the buys and sells, whereas they'll have people buying. So let's say they buy, 1 or 1.5 of BTC, but then they sell 2 BTCs. Okay. And I know that sounds weird, but what they're doing is they're playing it on the other side so that they can actually push the market down. And they're accruing, though. They are accruing. So what they're trying to do is just kind of push the market down involuntarily so that they can go in and buy up. Now we have a couple junction points here. We have that 39,000 area, 39,100 area where you have the 100 period moving average sitting at this yellow line. Okay. You can see this right here. Now the next part, and I'm realizing you can't see my arrow again. Can you see my arrow now? Nope. So frustrating. Okay.
Not everything's working great today, Pedro. We got the techno gremlins here, but
yeah, we do.
All right. Information is good.
Yeah. So the next part is down at that 200 period moving average. Is that 33,600 area. These markers are where we could see. And the reason why I point this out is because, again, this is sitting at an area. If you are an ICT trader, you'll know that we're coming into where the 200-day period moving average, as well as a why am I forgetting what it's called?
It's just one of those days, man.
Yeah.
One of those days.
One of them days. Who's that person who sings that song? Just one of them days.
I don't know. It's nothing's coming to me today easily.
Yeah, it's all good. But you can see right here that we're sitting in a PD array. I believe that's what they call it. Where again, I think it's let me see if I can pull it up. I look at that type of stuff. At the FVG? No, that's not it. Anyways, the reason why I'm bringing this up, the reason why I'm saying this is right here is this is based in area. So it does line up with that 200-day period moving average. So I do see, if we're going to see a decent bounce here, we're going to see it kind of bounce off of this area or this area. But I'm hesitant to sit there and say it because I don't see a strong trend off of these. Like, it'd be a different story if I was looking at the 100 and 200-day period moving average and seeing it look like that, but it's not. It's kind of going sideways. So for me, that is an indication of it's not a strong trend. So it's going to bounce off of it, but I don't think we'll see higher highs from here. And so that's why I feel as if this is just some more shenanigans happening with the institutions. Now that they're involved, this is just the same old par for what they do. It's nothing new, right? But now it's in crypto. So That's just how it rolls. But also comes to the point where you have an infinite system that goes into a finite system. It's going to be a lot of money to push this around, which is going to be nice because we're going to have big movements in the market. Also, you have down at the lower level, you have the 400 period moving average sitting at that 29,000 area. So if I'm going to short, this is where I'm really looking to kind of short for a pullback into the 4-hour moving average area, where I want to see things. You can see that we're already starting to turn off of that 8. It's fine
Right.
support, and now it's boom. So I want to see it pull back into that 8-hour as well as the 4-hour, or the 4-hour and 8-hour 8, as we start to find trends as it continues down. So when it does pullbacks, we want to take shorts down to these lower levels. So that's it in a nutshell.
All right, Pedro. We had a tough start to the day today, but
Yeah, we did.
we've had
It
a
was
great
good.
week.
Yes.
We've had a great week at the past couple weeks. I don't know
Yes.
if we covered it in the previous live stream here or not, but ladies and gentlemen, we've hit 10,000 subscribers
Oh,
on the
yes.
YouTube channel.
Yes.
We're routinely averaging about 100 people on our live streams between YouTube and LinkedIn. And actually, today was a YouTube exclusive event, not broadcasting on LinkedIn. We're directing the people from LinkedIn over to YouTube to watch this. I think they may have missed out today, so they'll have to catch it on the replay when I upload it. But anyway, it's a big thing. It's a big deal for us. Last week showed us that our viewers were checking in with us, including a bunch of super chats and things like that. That always helps engage the algorithm. And so thanks to everyone watching. Thanks, Chuck. Thanks, Dara. Thanks, Crypto Mike. Thanks everybody that joins in. And so we planned on this week having a good guest to kick it off. Unfortunately, the techno gremlins fired us all on that. But anyway, I'm going to bring Anton onto the stage now so we can talk about some stuff. Anton, welcome to DYOR Live again. This is about the third or fourth time. I think you're going to be our most frequent guest here soon. Where in the world are you coming to us from?
So first, thanks a lot, Tom, for inviting me, and really great to be on your show again. And also really seeing in the chat the super active community that you have. It's really a pleasure. It's really awesome. And, just great to be back. I think the vibe is awesome because kind of crypto has recovered since we spoke last time. And, I'm all over the planet, all over the world by the moment in Dubai. So really, exciting, to talk to you from the other side of the planet. And also a big, hi to your audience. And, I'm sure we're going to have a blast today.
Well, there's one thing, if you've listened to my show periodically, that I spent many years working in Dubai and in the United Arab Emirates, and I truly enjoyed it. I haven't been over there now, and in fact, the last time I was there wasn't even for work; it was for vacation. Mrs. Striking and I went out into the desert, close to the Saudi Arabian border, to a resort out there, which was just absolutely gorgeous and unbelievable. But I know that the city of Dubai has been, as we all know, hosting crypto events like crazy. They're getting their regulation in order, and so companies are opening up shop legally there and with the rights to operate. We know that Vara has been it was slow to start, but now they're starting to license people. But you're there for some events, and you've been there for many events. What are you there for now?
Yeah. So I mean, today I'm there just now also for business purposes. There's not like a much events happening now because I'm sure like if your audience doesn't know kind of like this secret, it actually the crypto world moves to Switzerland actually during the winter for the World Economic Forum. So today, I know that a lot of my friends and colleagues was at the World Economic Forum in Davos, in Switzerland. I'm sure
Right.
that you and your audience, have watched all of these politicians and people going there talking, talking big vision, big stuff, some very concerning things as well. But what I can tell you is that what I've heard from a lot of people is that crypto is no longer the main hype at the World Economic Forum. So AI took over.
Right.
So if you say I'm doing AI, then you're the king or the queen. And if you say I'm doing crypto, you are, last year's news. So it's basically game over for crypto, and we need to we need to move away or make space for AI. I don't know how I want to say, but basically AI is the big thing now, and things have changed quite a bit.
Well, I think that's a good thing because, as we know, that whatever gets the most attention at the World Economic Forum draws the most negative comments from the Twitterverse and also the most attention from regulators. And if they can turn their eye to regulating coming up with bad impromptu or emotional laws for AI, maybe they'll stop doing it for crypto. But more to the point, Pedro was on a minute ago talking about Bitcoin and how the market makers are moving it, or trying to move it, and the market makers now are what you're traditionally used to be called a market maker, and now they include the big banks and ETF people.
Yes.
From your perspective of being a market maker in the past, did you think that this ETF event, that like the actual launch of it, not long term but short term, would really move the markets at all, or was this kind of expected that the news would sell off a little bit?
Yeah. So I mean, from the approval of the spot Bitcoin ETF is really the biggest thing that can happen, and that has happened pretty much the whole year. So the biggest event, we actually had it in beginning of January for the whole year. I think I really want to tell this like to everyone listening. This is a huge, huge thing for a very simple reason, is because of a lot of liquidity is going to come in, like enormous billions and billions of dollars is going to come into crypto space through the spot Bitcoin ETFs. Now, if you're asking me about short-term action, you had like one thing happening prior to the launch, to the approval of the Bitcoin ETF, and you have now something happen that's really, really topical, like it's happening today as we speak. So kind of prior to what has been happening in the last couple of months, a lot of people have made speculative bets that the Bitcoin ETF will be approved. But those speculative bets have been placed, 3 to 6 months ago. So that's the first thing. The second thing that happened also quite a bit time ago is actually that a lot of people made a trade where they bought the Grayscale Bitcoin ETF, or back then it was the Bitcoin Trust, GBTC, and they shorted Bitcoin outright in the crypto markets. And why they did that? Because there was actually a discount between the NAV, between the price of the Grayscale Bitcoin Trust and the spot price, And a lot of people put that trade because the discount was massive. So this is what happened before. Now what's happening today are two things. As we speak, literally like today, I said, that a lot of these people who were doing speculative bets and who were trading the NAV discount, they're now unwinding the trades. So they're closing the trades. And that's actually kind of not, it's basically either net negative or net neutral for the markets, but it's definitely not net positive. And the second thing that's happening, literally like today as we speak in the last couple of days, a lot of people are exiting the Grayscale GBTC, so their Bitcoin ETF, because they have crazy high fees and nobody wants to pay these crazy high fees. They're moving, into BlackRock's and Fidelity's ETF as well.
So is a lot of this volume that you've been seeing in ETFs just moving from one fund to another?
That's the case. So net, we are pretty much where we were, like last week, our net, you look at the inflows, you look at the outflows, basically we're flat. Like I think it was like a minor outflow from the Bitcoin products, and I think it was like 20 million. So peanuts, it's really nothing in the context of billions that we expect to come in. And it's literally like, if you take a look at the data, 2.4 billion went out of the Grayscale, and then half went into BlackRock's ETF, half went into Fidelity's ETF. That's basically what's happening.
None of it went in my pocket, so it didn't benefit me at all.
Yeah, you have to launch your own product. You already have the audience, you have people that trust you, have good guests. I'm sure we could rack up a couple of billions easily.
All right, so we've seen the short-term effect of the ETFs and the money moving around, finding the lowest fees. Our topic of our show is what's going on with 2024. How do you see this ETF thing playing out the rest of the year here? Regarding Bitcoin, you mentioned liquidity coming in. That doesn't mean price go up. That could mean price go down, depending on what players are buying and what players are selling. What's your feeling for the ETF market, the balance of the year?
Yeah, so I mean, look, on the ETF side, just to say it, I'm not giving people financial advice, but
no, yeah, that's right. We need a disclaimer.
Just to mention, but we are going to have massive amount of liquidity coming in. There's going to be liquidity coming in is extremely positive for the price. So let's just say it like that very clearly. No matter what the ETF is, in this context, I really like the research that Galaxy did, which is Galaxy is one of the biggest crypto asset managers and trading firms, they estimate, 40 billion of liquidity will come over the next 3 years. I mean, if you put that into the context, of the crypto markets of Bitcoin and, understanding, I understand and I know as a market maker that the price is set on the margin. So to grow the market cap by 1 trillion, you don't need 1 trillion of liquidity. You actually need a lot less, actually. So if you put this into context, liquidity coming in 40 billion over the next couple of years is going to be massive. It's going to be insane. But let's now talk about some serious thing that nobody's mentioning. I'm really shocked that nobody's talking about is the fact that Coinbase is the custodian for pretty much all Bitcoin
It's so
ETFs.
amazing to me. It really is.
But Tom, let me tell you this. Do you know that Coinbase is getting sued by SEC? And if they lose the lawsuit, the ETF issuers will not be able to work with Coinbase anymore. It will be their fiduciary duty to diversify, to mitigate the legal risk, and move away from Coinbase. I really think like nobody's thinking about it, and I'm shocked. Like I need to write about it, or I need to tell more people about it. We have a massive, massive risk. First of all, we have a massive risk that actually Coinbase is the custodian for pretty much all ETFs. But then the question is, who will step in if Coinbase loses the lawsuit? And I'm afraid it could be JP Morgan. I mean, this could be huge, actually, that we literally, we got the product, we have some crypto companies offering services, we kind of, okay, it's a bit concentrated, but, ETF issuers will diversify. But if Coinbase they're getting sued, and if they lose the lawsuit, they're not going to be the custodian of the Bitcoin ETF anymore. And I'm afraid that will be an opportunity for the big players to jump in, and that will be JP Morgan. And I can tell you, they don't see, at least by the communication from the CEO, they don't have the same vision for the future of Bitcoin ETF as we do. So I might have shocked now everybody, but we need to talk about it because this is massive. And I can't believe nobody's saying anything about it. And it's because it's playing in our side.
And what I can't believe is that the SEC is working both sides of it. They're suing them on one side, which could cause them to stop working, and then on the other side, they're forcing most of the people. I think Fidelity and one other group are not custodying with Coinbase. It doesn't make any sense. A single point of failure. It doesn't make sense to me that all those big ETF companies would put all of their Bitcoins in one basket.
Yeah, just let me tell you this, Tom, because I spoke to a couple of people here, and I was like, and it's really senior people coming from traditional finance, and I was asking them and saying, hey guys, like, why is nobody stepping in? I mean, this is like a amazing opportunity for you. Go in and grab the AUM, And they all said that the risk of a screw up is still way too high for them to get involved. So they basically said, this is awesome. We love the products. We will, charge fees when we enable our kind clients to invest in. But for us, it's too big of a risk for a screw up.
So here's the thing.
Yeah,
we've talked about that quite a bit over the last few weeks
here
on the show, where we keep bringing up the fact is that one, they're being sued by the SEC. Two, the fact that all of the BTC being held by Coinbase is an astronomical risk, simply because, I mean, when you looked at JP Morgan and how they were literally being inundated with literally 45 billion attacks from a cybersecurity standpoint that has been absolutely ridiculous, sooner or later it's going to get cracked. I mean, they do not have all the money. I mean, they do have all the money in the world because they're close to the SEC. But the reality is is that back end of, they've got a huge target on their back and everybody's gunning for them. And if they crack JP Morgan, if they crack a lot of these other issues, you'll see everything focused 100% itself directly at Coinbase. And I think you're singing what we're singing. You know what I'm saying? You're singing what we're seeing and we've talked about.
Yeah.
Yes. Yeah.
Oh, the SEC continues to befuddle us. There's your English word of the day, Anton, befuddle. And it's the equivalent of putting the egg beater in your brain and spinning it. Anyway, but knowing that there's
Tom, can I add just something actually? Because I also, like, a lot of people are giving a hard time to the SEC, especially to Gary Gensler, the chairman of the SEC. But I was paying close attention how the approval of the Bitcoin ETF was, playing out, and I knew the process, so I kind of knew what to look at, what's interesting, where I kind of got hints that it's going to happen. And, and Tom, that I was like the loudest person on social media saying it's going to get approval. It's happening. Let's get ready. It's going to play out. But one thing that I was really paying attention, so just for the people who listen to us, if they don't know like how the approval works, you basically pretty much at the end, you have like a public meeting. It's a public meeting where the commissioners of the SEC have to vote publicly and decide if the ETF is approved or not. And that there was 5 members, 2 voted against and 2 voted for the approval, and there was 1 decisive vote. It was Gary Gensler.
Yeah.
Right.
So just to say it to everybody who is listening and who is like thinking about it, Gary Gensler was the deciding vote for the approval of the spot Bitcoin ETF. So now you can talk about him whatever you want, like how he sees things, how aggressive or not aggressive he is towards the crypto industry. But it's a fact of public record. Gary Gensler decided. He was the decisive person.
And he voted with the 2 Republicans.
Key point.
Just to bring in the politics inside, but I think people just need to know this stuff because I think like not a lot of people pay attention to these details just because they're not important and maybe they're not like you don't know about it. But like when you really look deep into these things, it's like he made it happen for us. And let's give him I don't know if you want to give him credit, but let's say it how it is because it's because of
we're going to keep him on a tight leash on this show.
Yeah. So let's give him praise, but not too much. But he was the decisive vote for the approval.
It's interesting. I want to ask you a quick question, Anton, in relationship to this. So seeing and we talked about, me and Tom were both talking about as we're moving up into the release and creation of the ETF, we definitely saw a drop in a lot of volume coming in. I mean, we kept bringing this out, and I said, I expected us to actually have a drop on BTC at around the 30,000, 40,000. And we did. That was in October where we saw like the war breakout. And then from there, we also saw the other drop here at the 40,000 mark area that I was talking about. Yeah. And so seeing the volume really really not step in and almost like be less than what we saw in the past bull markets. It was almost like I kept bringing up the old fighting stance with Muhammad Ali, the rope-a-dope, right? Boom. It was almost like a rope-a-dope situation going on where we had this huge push up, but no real volume in comparative to the last bull market that we saw coming in. Right. So my question is this: Did you expect to see a sell-off right before we saw any, or what were your thoughts on that with as we're moving in and not really seeing a lot of volume step in?
Yeah. So like in terms of like how the things played out in the last year, but also in the last month, we have to understand like it's shocking information. Like in 2023, Bitcoin went up more than 100% and did not have a single correction. So this is what you're talking about, right? Kind of, it seems like the volatility dropped, right? Volumes dropped. But we kept on, sorry, I need to do it like that, chugging up, right? We kept on chugging up the whole time. And I was looking very closely at this for many, many months, and what you saw is that very little liquidity came in last year. Yep. And it was around 2 billion, net 2 billion in the last year. And a lot of the price moving up is because of the shorts were getting liquidated all the time.
Absolutely.
You had this kind of like, volume drops down, volatility drops down, a little bit of liquidity comes in, price chugs up, and then shorts get liquidated, and again you have a spike in volatility. Yep. And this is kind of how it was playing out the whole time. And I think like if you tell me like what I was expecting, at the approval, I think everybody got thrown back and like their mind was blown away when SEC's Twitter account got hacked and basically the news came out, and if you look at the price move, I like to look at, I'm not like a minutes trade, I don't trade in minutes, and I'm like a long-term guy, but Absolutely. Everybody got liquidated. Everybody who was making any bet on the short, on the long side got screwed up. And then
Yes.
the next day we got the approval and everybody was looking at each other saying like, guys, we have no money to trade. We blew up, all of us, long and short.
Well, I want to ask you something, because like you were a trader, you understand how the banks work. You understand how they get liquidity, and you also understand how they take people's stops, right? Like you get calls from Deutsche Bank and say, hey, I want you to go long here and then go short here and take the other side, right?
Yes.
Am I wrong?
Yes.
So
Yes.
so the reality is, does this not look like, I mean, listen, I've been in this game for 20 plus years. So I kept saying to our teams here, I was in there going, look, let me jump into it, because it's honestly, I think it's one of the most beautiful trades I've seen, because crypto is so technical, right? That it was astronomically crazy to sit there and see this. This right here was literally pop up, pop down, drop.
Yes.
And I sat there and I literally, because I said, guys, be ready for this. Be ready for this, because it's what they're going to do, because now the big banks are involved. So
Yes.
I'm going to ask you something, this is, not to say this is conspiracy, but the fact is, I mean, to be honest, could they have allowed the fact that Gary Gensler sat there and was the deciding factor of it, kicking everything through, right? Also, he knows that he's suing Coinbase. Do you think that they did allow that Gary, somebody there simply said, you know what, we know this needs to happen. This is going to cause a fear of a situation that's going to cause uncertainty in the market. So we can sit there, let somebody hack it, let it be hacked. And then from the hacking, it was going to come, people are going to buy, and then we'll be able to play the other side so that we can short it and start to push it down.
Yes.
Do you think that that'd be something that they would allow if the big banks? Go ahead.
Yeah.
Sorry.
So just let me tell you like a big secret, actually, that you kind of find out when you start working in regulated companies, highly regulated companies, you understand how things work. Is actually that the regulator, he doesn't tell you got the approval, but they pre-communicate to you that everything is ready on your side to get an approval. So for the banks and the players involved, it was not a big secret for them that they're going to get approval of the Bitcoin ETF. Yeah. There was not I just trust me on this. For them, this was not a big secret. They knew it. And if you know how to read the signals, if you know the process and how things work behind the scenes, then like me, you could have known that there's going to be an approval. And, Tom, I think you and I follow each other on social media, but I was screaming for like weeks saying, we're getting the approval, prepare, it's happening, there's nothing stopping us, bull run is about to kick off, get ready, because I know how these things are done, actually. Right. So this is kind of like to tell you one thing, actually. Yeah. Now, you have to understand, like, all of these players that are now working on the Bitcoin ETF, they don't want to take risk on the price. They want to make money on the fees wherever they can, but they make money on the fees. They make money of fees with the custody, with the issuance, with the underwriting, with the transaction, with the execution, with
like
the
banks now. They just make the money.
Everything you can imagine, actually, they want to make money on the fees. They don't want to make bets, because bets can backfire, actually, and very badly for them. And I tell you, like, for a lot of these traditional players, crypto is still a massive risk, even if it got the approval from the SEC. Right. Now, but to tell you, like, look, being a market maker in the crypto space is fascinating, because, I mean, when you're a market maker, you're providing liquidity and everybody's trading against you. So you see when people get stopped out. You see, very rarely you know exactly where their stops are, but you kind of, if you're smart enough, you kind of know where they are, And it's like, stops, and the liquidations, it's what moves the price like crazy. And when these things happen, market makers see it, they say, hey, it's happening now, spreads go wide, liquidity disappears, and then you have complete madness, actually. So look, this whole thing with the hack, I think it was catastrophically done. I mean, this is an embarrassment, but it is what it is,
All right, well, ladies and gentlemen, Carmen Crypto is in the house, coming to us from Las Vegas, Nevada. Carmen, thanks for joining the show. Appreciate it. As always, contribute where you can, Carmen. And also, probably towards the end of this week or next week sometime, we're going to need you to come back on the show and chit-chat with us, just as Anton is doing today. But Anton, I think one of the problems is that you're talking about, said, hey, it's going to happen. It's going to happen. I mean, everyone saw behind the scenes the infrastructure being put together for the ETFs come. NASDAQ was listing the iShares, not tradable, but listing them. People had their custodian things all lined up. A lot of money was being spent behind the scenes on legal fees, consultants, all that type of stuff. And those companies were not going to spend that money if they didn't know that was coming. Yeah. And so, maybe there could have been another small delay, like the SEC says, oh, we got a few other things to work out. You saw them go back with questions a few more times and say, hey, update your 6132B, whatever form it is, with answers to these questions. But so it was coming up, but still the great internet was doubting that it was going to happen because my personal opinion was that, most people felt that this was a good thing, the ETF, even though the Bitcoin originals, as we call original people, and Bitcoin maxis think that ultimately ETFs could harm Bitcoin itself. But it was going to happen. It was going to happen. The liquidity it was trickling in. And so I have to go back to that question about liquidity for 2024. Pedro and I have spoken about this from a U.S. point of view, because this is where the ETFs are. From a European point of view, or from a different part of the world, is the rest of the world going to be able to either A, take advantage of these American ETFs, or will your home countries or the EU see that the SEC has finally done it and expand that and allow more of them in the rest of the world?
Yeah. So look, to answer like your first question, actually very directly. So in general, yes, you can access US markets as a non-US investor or trader or institutional player. But the thing is, like, a lot of there's many times restrictions actually where you can trade, as a European investor or as a Canadian investor, for instance, the question is like, can you access the US markets? And in some cases, or even in many cases, the answer is no. So you cannot, or the broker or the prime broker will not enable you to invest into US markets because of specific restrictions, laws, regulations, and you cannot do it that easily. So just for, for you to know that. Right. But look, now on the other side, a lot of the professional institutional investors that can access US markets, so then they can access the spot Bitcoin ETFs in US, is they actually, before the approval, they had an investment mandate. They told them you can only invest into products that are listed on regulated exchanges, including stock markets. So before the approval, they just didn't have, they were not allowed, literally, by their own investment mandate to invest into Bitcoin and crypto. So this is huge now because they have a product where there's a clearly defined underlying, which is, your Bitcoin. They have the access to it through the prime brokers, exchanges, settlement entities, clearing entities, and everyone. So everything is set up in the back. As you mentioned, the infrastructure is there. And it now actually fits their investment mandate. So this is huge. I mean, this is absolutely huge, And I anticipate, that a lot of the players around the world will now invest into crypto. But Tom, let me tell you, what's the big thing that could happen this year? Let's talk serious stuff.
What is it, Anton? Let us know.
The biggest thing that can happen this year is if a central bank puts Bitcoin on their balance sheet.
Right.
Let's talk serious stuff. This will be massive. And the reason why I'm telling you this is because with the spot Bitcoin ETF, crypto is now a legitimized product. It's a legitimate asset, And when I'm thinking, I always try to think several steps ahead. I think big. And I'm telling you, the big thing would be now for a central bank to put Bitcoin on their books, on their balance sheet. And if I would have to make a wild guess, I think that would be, if that would happen this year, I think maybe one of them would be in Europe. I think I'm winking now. I think you know who I'm talking about, and maybe one of them in the Middle East. I'm again winking at you. You know what I'm talking about. So let's talk big stuff. You know, it will be central banks buying crypto.
Well, I'm going to put that question up on the screen for the audience to reinforce that. Bitcoin on a central bank balance sheet. Now, I think that's, we got Carmen listening from Vegas. Carmen, go to the casinos and see if you can find someone that will take that bet. If a central bank will put it, never mind the BIS. If they were to, I can't remember the leader of the Bank of International Settlements, the large gentleman. If he were to suddenly come out and say, "No, we like Bitcoin," and put it in the BIS's balance sheet, that would be something. To be honest, I don't fully understand how the Bank of International Settlements works. But if that guy who has been traditionally very against crypto that would also be something amazing. But Anton, I'm going to take you up on that bet, and I'm going to file that one away and see. And I'm going to bug you about it. If we get to July, I'll remember it. And we get to September, I'll be like, Anton, only a couple more months left in 2024. And by the end of the year, we'll be like, we'll do a show. Wow, that one didn't come true, but let's talk about 2025.
Yes.
Well, that's interesting. I hadn't thought of it like that. And if that does happen, I think that would be amazing for just the price action. I mean, many people.
Yeah, and I mean, just think about it. This is the next logical step, right? So we had the Bitcoin maxis, for many years, doing their mining, trading. Then you had kind of retail coming in. Then you had kind of VCs coming in. Now you can actually get professional institutional investors coming in. You have now the banks involved, the biggest asset managers. I mean, what's left, It's the central banks, right?
What's left? Elizabeth Warren's left. That's it.
Yeah, exactly. And, really, like, when you think about it, and, I think, like, some of the central banks, even though we might not have the best opinion about the activities the central banks do today with the inflation that's out of control for decades, it's really hurting us, individuals, professionals, everybody, but some of them, they're very sharp, and some of them are thinking several steps ahead. I'm trying to match that, also thinking several steps ahead. And when you think about it, what's left now is the central bank space.
Right. A viewer, Dara Lawton, coming to us from Ireland, says it's Bitcoin on a central bank's balance sheet is better than having zero or worthless paper IOUs. And then he says they used to have gold, and obviously they used to have gold. The world's a different market. If you want to understand my thoughts on having a gold reserve again, go over and find my video called Bricks Gold. And I'll give you my opinion on why that's just not workable anymore with the size of the economy and that type of stuff. But you're right, Dara. Having Bitcoin on a balance sheet is basically better than worthless paper, unless you have the world's largest military standing behind it, which is what we do here in the U.S. So,
yeah. If you don't buy this, we're going to come invade you.
Yeah, or if you don't sell it to us at a reasonable rate, we're gonna come. Oh, we just took over for the British. The British used to say, used to go sail somewhere and find some people and say, "Hey, you got a flag?" No, we don't have a flag. Chunk. Here you go. Here's one. It's the Union Jack. And so the Americans just kind of took that over a little bit. Dara says Tony Soprano economics again. Yes,
pretty much. Unfortunately.
Well, to be honest, Putin is doing the mafia economics. That's for sure. All right. Speaking of politics, let's quickly hit it. Anton, you had a post viewed a lot on LinkedIn about what's coming up with the U.S. presidential election and the fact that Donald Trump said that he would prohibit CDBCs from coming in altogether, which if you listen to, Pedro and I, we talk against a lot about it because of the dangers of having a government centralize a currency like that. But more to the point, what do you see for the crypto markets in a year that has a halving and a not normal U.S. presidential election coming up?
Yeah, so look, I mean, first for the halving, the people who have been in the crypto industry for a long time, to the newcomers, they always explain halving as like the next biggest thing. This will reshape the markets. It will change everything. The supply is shrinking, these crazy stories. I mean, just from my experience, which is now over a decade, the halving has this has minuscule impact compared to the liquidity coming in or coming out.
Really?
So yeah, this is just like practically, it just doesn't actually impact that anymore, because also, it's just like when you do the little bit of math, you see actually that the liquidity is the one setting the price, because that it has a strong price impact. Then the halving, which is actually mostly a game, played by the miners, which they have their own methods, actually how they hedge themselves, how they actually make their business sustainable, and there's a lot of this. So my experience is halving has a lot less of an impact than liquidity coming in. So that's kind of like my first thoughts, actually.
So
now, yeah, go ahead.
So I want to ask you something. So you might be better, because I'm not the best at explaining this. Why is it that liquidity is more important than the halving? Why is it that, because we do have the halving, liquidity comes into the market, and why do we have these, even though it's a very the balance of liquidity, right, is like 49% to 51%, all of a sudden there's much more coming in. It's a smaller amount of liquidity, it's a smaller amount that leaves, but you have this huge push of people that are buying, right? So why is it that correlates like that? Why is it that volume slash liquidity coming in, money coming into the market, why does that make us jump so high with Bitcoin? Why is that so important?
Yeah, so it's actually a very simple explanation, is because Bitcoin is an asset with a finite amount. There's going to be 1.5 million Bitcoins left that are going to be mined, forever. But you have infinite amount of liquidity chasing that finite amount. That's basically the reason. So the problem is, so the supply side is fixed and it's shrinking, but the issue is that infinite amount of fiat is going to chase that. So that's why the side that's chasing that finite asset has a bigger impact than the supply. So hopefully this makes actually what I'm trying to tell you is, because if there was no liquidity that comes in ever from this moment, so let's say from this moment on, nobody ever buys a single Bitcoin. What would happen actually to a price, even if you actually have, Bitcoins mined? Actually nothing. The price would go maybe a little bit up, maybe a little bit down, but it doesn't matter actually. The shrinking supply doesn't matter. Yep. But infinite liquidity chasing that shrinking supply is what matters actually. And that's why the liquidity has a bigger impact actually than the halving. I hope that kind of made sense what I'm just trying to say.
So basically what you're saying is that a infinite system is trying to be pushed into a finite hole.
Yeah, exactly. And that dynamic results that the liquidity has a bigger impact than the finite supply. So it's all about the dynamic. You can't look at these things in isolation, because if you think of them in isolation, you would think like, well, both is very important. And my answer is no. Actually, liquidity is more important, because liquidity is uncapped. Yep. It's infinite. They will print until we are all gone from this world, and even after, they will just print. And this is chasing a finite asset.
I agree. So here's the other question is, so in an area, because you are a market maker, you understand this, right? That in a market maker situation, if you have nothing but buyers and the sellers are higher, right? Because they know everybody wants to buy. So, let's say we're at right now, Bitcoin is in at 40,230. And let's say all the sellers just stopped and they were only willing to take they're willing to sell their price at, let's say, 100,000 Bitcoin. What would happen to the market instantly?
Wow, that's a lot of Bitcoin.
Yeah.
No. I mean, no. 100,000 price point, meaning we're sitting at 40,000 right now, 40,300, and all the sellers said we're no longer selling it at 40,000 to the buyers. We're only going to sell this at 100,000 Bitcoin. What would price do?
So Look, what you're describing actually reminds me a lot of my hedge fund days in the foreign exchange markets. Because what you're describing is very similar what happens in the FX markets, foreign exchange markets, when the central bank moves the interest rate. Because that's basically how the FX markets move a lot. It's like the central bank adjusts the markets, but they don't do it. They don't do it outright directly. So they don't do it outright directly how you described, but they do it through signaling and through interest rate pricing. So when they move on interest rates, we basically have a repricing, like how you described. It basically just looks like a step line, like just thing moves up and then just continues where the central bank had it in mind, And my experience is actually when you have this kind of repricings is actually that it's a very artificial market. It's a very disruptive market, Also because on the one side, you have the players that are in on this, and this is usually the banks. So the banks are supporting the central banks. They do this repricing, and then everybody else gets screwed. So I think you're kind of trying to describe a similar, it's like a situation that has an analogy to that. And what I would say is that this scenario that you described would only benefit the miners. That's it, actually. Everybody else would be screwed. I think also from an investment perspective, this would just not work. It would make it like an unfeasible asset class because it doesn't have a price dynamic. It doesn't have a way for the price to evolve through supply and demand changes. And I think this would be actually highly, highly disruptive for the markets, and it would not inspire trust. But look, I mean, the good thing is actually that the crypto markets are a lot more diverse than the foreign exchange markets, because the foreign exchange markets are dominated by the banks. Yep. All the tradings happens between them. In the foreign exchange market, there is no exchange. You don't have an exchange in the foreign exchange markets. It's all trading between the banks. Thankfully, in the crypto, it's a lot different. You have prop traders, market makers, hedge funds, crypto native hedge funds, venture capitalists, retail. You have a ton of retail. Now you have institutional investors, and this diverse ecosystem would not fit the scenario kind of where it's a steep repricing. So I think I just think it would be highly disruptive for the market, and it would not benefit us at all. It would be a play that only the miners could do. But thankfully, we have a very diverse ecosystem. Yeah.
I guess really what I'm trying to get at is price then would skyrocket immediately because there would be no liquidity to sell off to. And so we would see then Bitcoin go from 40,000 to 100,000 immediately, right? First of all,
yeah. If there's no sellers, it's
exactly.
Yeah, but just to tell you, like what I have seen is actually that liquidity gaps. This is kind of how we call it in trading. Yeah. Liquidity gaps are highly disruptive. And it's not like you have a liquidity gap, the price moves, and then everything is fine. No, you have actually a consequence, very negative, because when you have a liquidity gap and then you think like, okay, liquidity comes back. No, you have a problem liquidity for months afterwards. And that's why, I was telling you like this dynamic with the banks and the central bank, how they reprice currencies, you have huge issues then afterwards with liquidity. But, the banks play that game. But here we don't have the banks, we have a diverse ecosystem, but the consequence of liquidity afterwards for months and for years will be catastrophic.
Well, all I'm saying is this, it's not even, the fact is that we have a lack of, during a bull market, everybody's buying. Yes. There's not a lot of people selling. And so this is why we see a bull market every year. It's more like technical analysis, right? At first, it was a bunch of hogwash, but now that everybody believes it, what does it do? It follows it, right? And so banks take advantage of it, but then they allow it because it allows them to be able to bring in liquidity. Right. In the same sense, the fact is that we know every 4 years we have a halving. And so it's more of a psychological setup, much like moving averages, much like trading from a technical standpoint, is that everybody believes in it. And so it happens now.
Yes. Yes, I agree.
All right, you guys, I had asked you a question about the politics end of it. But I have a feeling. Why don't we pause on that, Pedro? Why don't we let Anton take a quick break here, and let's spend 10 minutes going over the charts that our viewers like to see to re-engage them, and then Anton will come back to you talking about politics in the end of 2024. with a presidential election roiling the world, and not just the U.S. There's elections in 75% of the world this year, and so we have a lot to talk about that. So anyway, Anton, give us a few minutes and then we'll come back. We're going to do a little technical analysis for people. And if you want to see Pedro do something, feel free to drop that in the comments too.
Also, yeah, honestly, you can stay in, because here's the thing. I'm going to go over right now yields, which I know you understand quite a bit. I'm going to go actually over a couple other things real quick so that we actually understand like how important. So our people are very abreast on what the situation that's going on with the inverse yield issue, right? With the fact is that we have a 30-year bond literally selling for 4.33%, yet then we have the 1 month bond or the 1 month note literally selling at, literally 5.39. So that in itself is a complete crazy situation, which normally shouldn't happen, right? And the only times we do see it happen is when we see major unraveling of the market, like 2008, like in the a few flash crashes that we've had in the 1970s. We all saw this early or late 1928, 1929, before we saw a huge crash, and as well as other times in the past, like in the 1880s, we saw something similar to this, right, where we had a big crash. Most people don't pay attention to that. And then, so the reason I want to bring this up real quick, forgive me for burping, I'm so sorry about that, is I also want to bring in the fact is that we're seeing, again, a downturn in the bond funds, right? And we're starting to see bonds starting to sell off, and we're following the 8-period moving average starting to sell off. So when we see when I start to see bonds start to drop and interest rates holding instead of going up, or right now it's just staying steady, we should see then interest rates move up, right? Hence, then we would then see the market turn around. So we'll talk about that in a minute, but I just want to throw that off because it has everything to do also in a play. I think they're setting it for a play here in Bitcoin. So it's going to be really interesting to see. What are people asking me to look at?
The usual suspects here.
Okay.
With just from ETH to Caspa, even to our pet project Mainnet Z.
Alrighty.
Anton, what we do a lot is we take a lot of requests from viewers, and we've got a bunch of viewers from a couple of small projects wanting us to review it. And we always have the caveats that we're not financial experts in this, and we try not to shill anything in particular, just give people some background as we see it, and that type of stuff.
So I also want to bring this up here so you guys can see it. So we all know right here, I've been talking about this area here, that 2,900, 2,700 since we've been down here, right? We have that on video, right? We came up, we tapped it. Now we're starting to see a sell-off. I've talked about this area right here of the 2,300. We might see some stoppage here. I'm going to put this in. I don't expect us to hold here, but there probably will be some type of bounce here. Give me 1 second on ETH. Here we go, ETH. So I'm going to dash this up here real quick and then kind of show this as we move forward here. I do expect us to do a little bit of bounce because we have the 50-period moving average sitting right above us. So I expect it to pull back into that 8-period moving average and then to see a sell-off down into the 2,100. Preferably, I'm looking further down where we're going to be looking to get in at that 1756. And this is really important. We know that the SEC has kind of turned down the ETH ETF as of right now, right? But the reality is this, is that is our next bug, right? So I do expect to see a sell-off where we'll see bankers or major institutions, once they hit the price point where they like it, I think they're going to be looking at the 1756, 1743 area, or even a little bit lower at that 1600. I would love to see it come all the way back down to that $1,000 mark, 1700. I know that scares a lot of people. I personally think the real value of it will come down to 534, but people don't want to hear that. So
Nobody wants to hear ETH at 534, Pedro.
right, I know.
But it's now in the algorithm and recorded forever. So
Hey, there we go. So you can see here, though, we should see a little bit of a bounce at these levels and then come down to this lower level here, I think. Again, let's check out the Matic. Oh, and Manta. So I talked about Manta a minute ago, or maybe about 2 weeks ago, 3 weeks ago. Not Mana. Oh, what am I forgetting what it's called?
yeah, Decentraland.
Yeah, Decentraland. But also another one that I was looking at. What was it?
Let me get my list out here.
Why am I forgetting it? It's the
Let's see the things you covered: R&D. You covered Gala. You covered ETH, Dodge, BTC, BNB, ADA, Ravencoin,
Can I
Shiba.
ask for DOT? For
Yes.
Polkadot, what do you think? Yeah.
Yeah, absolutely. DOT.
Yeah, we do that
Yeah,
periodically.
I do talk about DOT a lot because I like DOT. I think from a fundamental level, they're the GOAT. They're one of the GOATs. So I expect DOT to come down honestly to the 40. Like you can see here, guys, where we came down, we bounced off my area, and now we're finding up. It put in a higher high here, and as you can see here, we're really following that 8-period moving average. We're starting to see kind of a pickup in price movement, but not necessarily a bunch of sellers stepping in. So which to me indicates that we should see another market move around this area again. I do expect this to come down. Like you talking about market gaps, right? Market gaps where there's no liquidity. That's this area right here. So I do see this coming down to where buyers are sitting down at these lower levels here. So this is why I still left up that 480. I probably should completely put this up again so that you guys can sit there. So this is really the areas here that I'm looking at.
Which chart is that, Pedro? You got on with the time frame?
Yeah, this is the weekly chart. So give me 1 second. Weekly demand. So right here, and additionally to that, I do expect us to see a type get a pretty decent push right into these lower levels here. So I would sit there and say 533 to that 483 area. And then after that, if this does not hold, because these have all been traded through, then I do expect to see us come down to that 213 area. Again, I really feel like this is a major play because this is an OG and they still are used. Their blockchain, their ecosystem, it is still used a lot. They have a lot of money coming in because people use them. It's a fee-based system. So I don't think they're going to go away, right? It's just that the chart is different. Like if you look at Amazon back in the late 90s, early 2000s, they were slamming huge. But the reality is nobody knew about them, or excuse me, not 90s, but well, yeah, they were still around in the 90s, but it was really when they went completely internet based, right, that they went from $100 to literally I think it was $2 or $3 literally overnight, and everybody said they were dead, but yet they had a ton of business happening, like so much business happening. It was like the chart and the business are different, right? And so I sit there and say, look, I see it's coming down into these lower levels here. And so we, at this lower level, we have that 20-period moving average. We have that 50-period moving average. So to me, I'm looking at that $6, $5, $4 area for us to come back down, find support, and then to see into the bull run I think they're going to come back up. We'll see some supply at that $16 to $15 mark, where we'll see it come back down from that moment, and then from there the sky's the limit because all of these things have been traded through. So I'm pretty positive we're going to see above what we saw. I don't want to sit there and give price predictions here at this level, but typically, DOT would do, I think it could potentially do to 100. Right. So at any price points here that you're looking at, I think these are great price points, really great price points, simply because. And the reason why I say 100, very, very gingerly, is because it could potentially do a 3x from the highs. Right. We know that that's not far ideology from crypto.
Right.
Right. So to sit there and do, 100, I think it's a little shy. I'm actually being conservative there, where we could see $150, where it'd be sitting up here, if not even where it looks like this. Right.
Yeah, well, it's good to see that it seems that their volume is starting to slowly eke back there.
Yeah.
I mean, it was dead for you know, a year, not even a year, but did for 7-8 months there.
Yeah.
But
All right.
that's-
So what was the other one? So we're gonna do. And if you have any questions, Anton, let me know.
Obviously hit Caspa and Gala, and Chuck wants to see Litecoin, and he said he wants to see Litecoin because he mines it.
All right, definitely. All right. You guys can see right here, we're still sitting in this. So we hit our area right here, like I talked about, where now we're starting to see the sell-off here. We've been playing in this sideways action, but you can see here, we're starting to see.
This is Caspa, ladies and gentlemen.
Yeah, sorry.
I don't have my little box up telling you what it is because I'm on a different system today.
So this right here, we're still sitting in this sideways pattern here. And I'm expecting us honestly to sell through simply because you can see right here that the volume base here is starting to pick up here. So we should have saw a pretty big buy like this right here. When we bounce off this 100 period moving average here, to me, this was indicating very clearly that, all right, we should continue up here, but we did not continue up here. We couldn't even get to the 8 period moving average. So that means that it's selling off. It's going to go down through that 100 period moving average again. And I keep talking about that 7-cent mark area because that's the last real buyers were stepped in. It really defended this area and then pushed back up, came back for reinforcements to buy more to explode up. So this 7-cent mark area, the 7.7 to the 7.1 is a good area. Again, that also has the 200 period moving average sitting in that level. And then the next part right here is looking at the 4.8 cent to the 4.3 cent area for Caspa. Now that we're starting to see some momentum come into the downside, I do expect us to start to see a decent, good momentum to the downside, which is good for us simply because we're buying it on a cheaper level. 2, let's check on nets. Nets right here.
NetZ, let's pronounce it right.
NetZ,
And thank you to
right.
Texas Wolf for watching here today. Thanks, appreciated very much. Pit Monk, I'm guessing you invited him or put the word out into the main NetZ community. Texas Wolf, thanks for joining us here at DYOR Live.
Absolutely, thanks. And if you don't mind, please hit that like, subscribe, and share button. Anything you guys do does help. And if you want to leave a nice little donation, we'd appreciate that too, because everything goes into the cofferdam to push the show further. Now, the other part behind it, and this is where I talked to you guys about. Remember, when it looked like this, right? When we look like this, and it started, and it did not put this big one in, right? I said, guys, or when it looked like this is what it looked like. I said, look, if this gap up here is showing a bearish signal, okay, to me. This is a bearish signal to me to push up. And we should have seen, and I brought this up, we should have seen much more volume if we were going to continue up. So as soon as I saw the next one, the next day where we went up without putting a demand wick, so there was no demand wick, and we were shooting up, and I was like, it's going to go to the moon. I said, it's not going to go to the moon. We're going to see a sell-off, right? And that's exactly what we saw. So we came back down here, down into these lower levels. So now the next level I do, if we're going to continue down, would be around that 11-cent mark area to 10-cent mark area. And then if it goes below that, which is still not bad because you guys got a great community, look, I look at that 8-cent mark buy area to the 7-cent mark buy area for myself, right? If I'm going to get in, this is where I want to get in. I may buy some net here, but if I'm going to be one, if I really like, you know, like when you look at another project, like, man, can it go any lower? So I can buy more coin, right? So that's how you want to look at it in a sense, right? Like right here, I want to start my position, but my next position is going to be in that 8-cent, 7-cent. Like if I'm going to, if I see a sell off or a crash, right? I'm looking for somewhere around here to really load up. Load up. So
load up. Well, there might be some loading up going on. Let me ask you a question about this before I mention that. Let me ask you a question about this chart, Pedro. Well, I'm used to being able to point at my green screen, not today. Usually on the charts you show us, there's a wick on one side of the candle versus both, and these are pretty consistently on both sides of the candle. What does that indicate? I think Pedro went mute there.
All right. So
what do I need to repeat that?
Yeah. So what that means is this: is that we literally have a consolidation happening where you want to. Okay, so let's look at the weekly and the monthly chart here, right? I'm seeing more or less a sell-off and indecision. So to me, typically, when I start to see something like this, that means indecision. So I'm looking for a bigger side. My biggest side right here is literally the seller side sitting on things right now. So for me, I'm looking at this going, look, we're not putting in higher highs or higher lows, nor are we just putting lower highs, lower lows. So we need to gauge where are they defending, and they're defending the short side. So somebody's selling off so that they can actually push it down, or you're having trading bots that are trading you. Either way, I sit there and I go, if it can't get above that 8-period moving average, and we're playing in between the 20-period moving average on the daily, right? It's most likely going to see a sell-off down to this lower level and then find buyers to push it back up. Because this right here, we should have seen this push up. With this amount of volume, we should have seen it push back up, but we didn't.
Right.
So that's what that is.
Well, anyway, Pitmonk was telling us, but I forget when it was, but apparently there's some news coming about the rollout of MainNetZ's products and their utility and their blockchain and all that type of stuff. So if you're in the MainNetZ community, we don't want to speculate on what's coming. If something's out, let us know, or let us know when the information will be out so we can pay attention to it. So thank you to MainNetZ and your fans for watching us. What's happened with Gala, Pedro? Gala. Pedro?
All right, yeah. So Gala. So
if you got to go do something, Anton and I can get back to the politics.
And I feel bad because I know we got a lot of stuff going on. Give me 1 second because
it's
right. 2 o'clock. Give me 1 second. And we'll talk about Gala in a second.
All right, Anton. Let's get to the heart of the matter. Trump is running for president here. It's very explosive here in the US, what's going on. Misinformation is going like crazy. Disinformation, emotions are running high. And things like that make the financial markets unhappy. The financial markets love like nice and steady and predictable. Actually, it can be it can be up or down a lot as long as it's predictable, and people can mitigate their risk. This is a difficult thing to risk against from someone who's operated exchanges and money market maker and in hedge funds and that type of stuff. How do you see the political risk of this size coming to affect the market?
Yeah. So, I mean, just to tell you, like, as an outsider, because, all around the world, we are watching what's happening, in the most powerful country in the world, which is the US, It's just, I have to say, like, even now it looks, it's going to be a very rough, actually, presidential election, both like the way I understand it within the Republican space, who is going to be the nominee from the Republican side. And kind of like to be honest, also just to tell you, like I think kind of a lot of people have flagged that, maybe the current president, it's at quite, a different state than when we kind of became the president. It looks also many times like very challenging for him to be in that position. I think just with his age, I just say it openly, due to his age, and I think like, I don't know how that will play out. I don't know if he's going to be actually the nominee for the Democratic Party as well, but it kind of looks like it's an open field at the moment, And
he could very well just wake up dead one morning, like Weekend at Bernie's.
Yes, this is. I mean, look, it's natural. He's just an old person, This is natural, And then kind of when your time is, past your prime, it's a different lifestyle than it was like many years before. So this is just kind of, I say this like very politically correct, But look, I think like the support that Trump has, that we see, as an outsider, is just immense. Actually, I think like people really like him. Now you can say if this is well or not well and things like that is now personal opinions. But I think he has a super strong support actually. And I think he's going to be a serious contender, both to be the Republican nominee, but also to become the president, But, when I look at the presidential elections, and how these things are playing out, I look globally. And for me, I'm watching what's happening in China. And, I think, you maybe, you do this kind of stuff in your shows. You look at the global macro situation. Yep. And, and China is not having a great time. I don't know if like a lot of people are aware of that, but it's really
no, their real estate market's getting hammered.
Yeah, it's getting destroyed. And I think like just yesterday I was reading actually that, on Friday, the biggest brokers and the biggest banks are actually stopping trading. And they're preventing short sellers to put more trades because they're benefiting from the collapse in the price of stocks, And why do I say this? Because through my experience, kind of what has happened in the past, Trump is negatively correlated to China. So if China goes down, Trump is becoming more powerful and more popular, and vice versa. So if China is doing great, that's kind of not so bullish for Trump. So when I think about how Trump will do, because you kind of, I think you also asked very specifically about him, I look at what's happening at China. China is going through a very rough time. It looks brutal, and that's because Trump is negatively correlated with China. That's highly positive for Trump.
Interesting. I hadn't considered it in the light of relationship vis-a-vis China. The China question I always stumble over it because there are so many factors that go into China's influence in the world. You can't avoid it. I mean, you just can't avoid it. Everything we buy and use is made in China. Everything on my set here is made in China. Most of the labor force in the world that makes things is there. Thus, the productivity earned was what economies are based on is there. But linking it to Trump, I hadn't really given that much thought. If China does well, bad for Trump. If China does poorly, good for Trump. It looks like he's put them down when really it's just their real estate market imploding. I mean, the U.S. is surviving on debt right now, and China did drastically as well, and they're paying for it even more. Pedro will bring you back in just a second for that. But I want to pin you down on this. What do you think the financial markets in general are going to do during a tumultuous election? Is it something that they pull money out and go to cash, or is it just something that they just go, well, let's just see what happens?
Yeah, I think that the money will be flowing in for this year as well. I think, the presidential elections are going to be very turbulent. This is just kind of like how I see it already now. I think that's reality right now. And I think like the central banks, the Fed will help the presidential race quite a bit. They have already communicated you and Pedro actually flagged it when you were looking at the yield curve. They already communicated they're going to lower the interest rates. And they could be going back to zero very soon, which is going to be very positive for the markets, very positive for the current president. But I think also the Republican candidates or even Trump can very well ride this, wave upwards, over the next year. So I'm very bullish on all the markets, and it's just going to help everybody across the board in the president.
Man, I don't think USDC, Circle, and Tether want to hear interest rates going to zero and then watching U.S. Treasury rates come down too, because they're making some fat bank model. Well, we discussed this the other day on here about Circle, and one of the motivations for them to go public is I just kind of thought that one of the reasons why they're doing it is to raise money as a hedge against inflation going down, central bank interest rates going down, and U.S. Treasury rates going down, because if they can't invest in risky investments, but making $5 billion, $10 billion a year for free buying U.S. Treasuries and helping fund the U.S. government is an easy way to make money if you've got a lot of cash. But if those rates go down, then the stable coins are going to be in a lot more difficult situation. But I got a question from the audience for you, Anton. Dara Lawton says, Anton, any estimate on the size of the security token market in 2024? What level of adoption growth do you see?
So awesome question. Thanks a lot. And just to say, so today, the security token space or the real world asset space is around 2.5 billion, which is, peanuts. I mean, you were just talking now, Circle would make that in a couple of months, basically. So right. It's still very small. It's very early days, Look, the security token space is very much driven so far by tokenizing US Treasuries. I just think we need to be aware of that. And I think, Tom, you perfectly described it now, is if the interest rates go down, then basically means that the whole risk profile of all returns goes down, and the returns go down. First, it will make tokenized US Treasuries highly unattractive. Like, why would you buy a security token, that gives you zero, close to zero? And so I think like people will need to move and start looking at the different spectrum of security tokens. So tokenized private equity, private credit, SMEs, more exotic asset classes. This is where the security token space needs to focus in this year. I think like the genie has been taken out of the bottle, and you can't stop security tokens. Before it was too early, it was a different vibe, different story. But today, you have already the infrastructure to support security tokens. I think we will not move that far away from that 2.5 billion, AUM that we have now, or TVL that we have now. I think by the end of the year, we might end up at 10 billion in total, but we will have to shift away from the plain vanilla boring stuff, US government bonds, because nobody's interested in that.
So here's my thing, and this is not going to be, it's actually going to fly in the face of what you're saying. So I'm looking at the bonds, like I'm literally looking at the bonds, and I'm seeing literally bonds go down. The hedge funds are looking, they're putting in shorts and selling bonds.
You still have a different screen up, Pedro, if you're looking at the bond.
Oh, okay. Boom. I apologize. Let me jump on this here real quick. Here's our 30-year. Here's the ZB, right? Look, like they're moving down, and it can't even get above the 8-period moving average. Let's look at the 10-year. The 10-year can't even. It's having a hard time, and we're seeing larger sell pressure, literally, in as we're going down, and so that means they're adding a position again to push bonds down. Hence, the reverse then of that is yields higher, even though Powell's talked about now, QE starting up again. It feels like they're trying to break the system, because the reality is we came down, we bounced off our area, but if we were going, and I talked about this, months ago, that even though we might see it push up, it should have held off of this demand area. We should have seen it hold off this demand area, and we should have seen a much more real volume. If it was going to hold, we should have seen a lot higher volume. I didn't see a lot of higher volume. We see equal amount of high volume. So to me, that here screams to me, we hit the 400-period moving average, and now we're seeing a sell-off, and it's going to see a sell-off of the 10-year, 30-year note, hence then a higher interest rate. So it's almost like this weird double talk again, like Gensler doing double talk. The Fed's doing double talk here, even though they're talking about QE. That's not what I'm seeing in the charts. It's not what I'm seeing. I mean, we should be seeing interest rates. I mean, I should be seeing interest rates drop, like really drop, right? I'm not. I mean, look at a 1 month. The 1 month should not still be sitting at 5.39 if that was really real. It should not. There's no way. I mean, the 2-year should not be sitting at these levels. It's just weird for me to sit there and go, no, like this doesn't make sense to me.
Well, there's first of all, there's reality of what's going on. There's anticipation of the future, and then there's political response. And the political message is that the rates are going to go down because it's an election year, and they're going to do everything they can to do it. And we can see the market by your charts, Pedro. The market's doubting that.
Absolutely.
But you never know what the current administration may do in the next couple of months that could affect. We know that everything they do has an effect a few months later, a little bit right away. If they do something that's not anticipated, the markets react. And the long-term effects are, not always known of what they do. But it's an election year, and we'll see how the primaries and the summer trading season that leads up to the election shakes things out with that, to see if rates do in fact start coming down, or if it's just fantasy. And personally, I think it's fantasy because there's still too much money in the market, and inflation is still going to ramp right up. I mean,
the reason why I'm trying to bring up the 2-year mark is, and Antoine understands, the 2-year mark is the indice in which yield that's the pivot point. Like that's what everybody uses, right, to see what's going on. And look at this, Antoine. Look, they still don't have enough people at the auctions to come in and actually buy any of the bonds and the yield. Like there's nobody's there. They have to keep raising rates for them. Like nobody's coming. Nobody's coming and saying, "Oh, we'll take a low price because we believe in the security of America." and that shows right here. It shows right here that shows, look, like boom, we should have put a lower high in. We did not, or excuse me, a lower. We should have put a lower low in. We did not. Now we're putting in higher high and higher low. Same thing with the 10-year. Same thing with the 20-year. Same thing with the 30-year. These are yields. They should be going down. We're not seeing them go down. And the anticipation of this would have then still be to sell off, to go net neutral. And it's not. We're not net neutral here. Or
Yeah.
even, and so this is where, to me, I sit there and I go, on the backside behind that, then you have, that means more speculation, more money going into here, right? As well as speculation. I think we're going to see a 50-50 money, everything going, because everybody now believes that Bitcoin is some type of safety mechanism. I mean, the fact is that you did have a BlackRock individual step in and say, so I think it's really interesting with the climate. And the other part I want to ask, because I missed this part, your view behind Trump being China bad, Trump good, China good, Trump bad. But here's my question: like, are people really that dumb to know, like the real reason behind China bad right now is literally because they have literally a backwards population issue, and then on top of that, they also have a bad real estate issue that's literally imploding because of how they bet on America. People
Yeah,
don't
we
realize.
talked about that when you were off the air, I think.
Okay.
But yeah, the real estate, their economy is difficult. And but what we were talking about is, for the election market, if China's not doing well, Trump can say, I did that. I put the screws to them, and the market anticipated Trump coming to power, so China's bad. But if China booms and gets their market under control and does great and floods our market with low price products again, or they're doing in the EU with extremely low tariffs there, then that would look bad for Trump, because China would be perceived to be winning.
Right.
But anyway, let's take a quick break here. Chuck Jansen, $2 super chat. Thank you, Chuck, for your continued support of our show. We appreciate it. As we always say, we thank everybody, all our viewers. But if you were to contribute $2, there's that old famous line in that movie Better Off Dead with John Cusack. I want my $2. Famous movie line, and I just love it. But anyway, I want my $2.
$2 for his paper out.
Right. Anyway, thanks, Chuck. Really appreciate it. Good luck with your afternoon rounds at your clinic. Definitely. He's the doc. I didn't have our sound doing it this way. I don't have our sound effects today, but we'll just give it a doc, using the whole fist there. That's it of the day. Oh, well, we've been on the air long enough here. Just a few small topics to wrap up with. And first of all, if you have anything that you'd like us to discuss quickly, chart-wise, or a question for Anton, when we have a guest on, they're fair game, just as Pedro and I are.
Yep.
But one of the things that we did want to talk about, where was it? Oh, yes, this is what the topic that I wanted to bridge into also our continued partnership with Swiss Asset DAO. In a few days ago, you made a post about eventually every crypto project will need to turn into a DAO. Give us your reasoning for that, and how you see that play out in 2024.
Yeah, look, talking about DAOs, just actually to tell you something really fascinating that I saw today on your show, the amazing community that you have, and really you have people supporting you, showing up every day, watching your shows. You really are making this a big success story, but it's because of the community. Right. Actually, it's because of them, and it's for them as well. But you're doing it for them, because they are the ones who are benefiting from this, enjoying it. They're having a great time learning, and making money hopefully from all of this. So this is really the goal. So that's what I mean when I say that every crypto project will be a DAO, because crypto industry is all about the community, all about having passionate, amazing people supporting you and driving you, and making together with you this a massive success story and benefiting from it. But the way to make it a massive success story, DAO, to crypto projects, to make them a massive success stories on a global scale, you need to have a DAO. You need to engage them, you need to involve them, and you need to do it in a proper way. You need to have a proper legal setup, how you work with all these people around the world, how this works in a sustainable way. Because if you do Wild West stuff, like FTX and blowups and scams, it doesn't work out. To do it properly, and that's actually what all about the DAOs are going to be about. How do you actually put your community on a sustainable path such that everything becomes a massive success story? So I think a lot of people interpret when I say every crypto project will become a DAO, they think I'm talking that we're going to write smart contracts, and smart contracts are going to, do something for the crypto project. But what I'm talking about there is that it's the community and the crypto project going to work together to make it a massive success story, and that's a DAO.
Well, on that note, you did publish on LinkedIn a document that was I think it was a 20 million page document about the structure of DAOs in the United States. So you want to care to comment about that?
Yeah, I mean, this is actually something I was talking to a friend of mine, and how DAOs work, and he's a very close friend to me. You might even know him. He's a member of Swiss as a DAO, Mathieu, and he was telling me, I want to do a DAO, but he lives in Miami, and I kept on telling him, Mathieu, don't do it. You're going to have a massive headache. Let's do it somewhere else, And then because he's such an analytical, super smart, brilliant guy, he found a paper, 200-page one with all the different ways how you can do a DAO. And I went to read that with him. And basically I told him, Leah, yeah, look, you can do it, but why would you have a massive, pain in the ass and do a DAO in US? Because it's objectively, it's very challenging. It's difficult to do a DAO. In actually anything crypto related to do in US is very difficult. So right. This is kind of how I saw it. But I thought you were going to call me out on my today's post when I wrote that most DAOs are bullshit and calling out the fake part in decentralization. But thank you very much for mentioning the other one. I got scared for a moment.
Well, on that note, I didn't see that post, but that's a good question for the balance of the year as we see the legal framework become available for DAOs around the world. Well, not so vast, but in certain places, as we see enforcement stepped up, you're going to have to see a lot of DAOs that are the bullshit ones. They're going to have to close, or they're going to have to merge with one that does have a legal presence. And I haven't looked up your post yet, but it's my prediction that in 2024, a lot of those DAOs will have to go away because their local tax authorities are coming around to them saying, "Hey, you can't be a Canadian DAO and be registered in Panama for that long. Now that you're starting, you may be earning money. Some of them even are formed in a way in which they just kind of lose money to claim expenses in Panama and things like that." And eventually the authorities are going to come around and go, this isn't right. So that's my thing. I'm going to go back and read your opinion on that. It probably will get a lot of play on LinkedIn because there's a lot of, what did you tell us the other day? There's 86,000 DAOs or some crazy amount.
Yeah. Yeah, there's a ton of them actually. A lot of people don't know there's around 20,000 DAOs out there. I mean, imagine 20,000. It's unbelievable, But as you say, a lot of them are just digital, not sustainable. I think if you take a closer look, you see that a lot of this is kind of very shaky. This will go away. And I think the day we have the tools and also the knowledge to set up DAOs in the right way, make them sustainable. And this is also what Swiss Asset DAO is about. This is also why I work on that. You work on that. You support Swiss Asset DAO because there's a big market for it. There's a big opportunity, to serve DAOs and help them set things up in the right way. There's a big awareness around it, but I can also tell you, I talked to so many of them, and many of them just still don't care. But these are the ones that are going to probably go away.
All right. Well, if those of you don't know, full disclosure, I am involved with a project called Swiss Asset DAO, which Anton is the president of. And so we always like to talk about that a little bit on the show. And now that the holidays are over, getting that project up and running, hopefully we'll get back going. But speaking of get back going, Pitmunk, a regular viewer. First, Pitmunk, sorry I was not able to participate in that Spaces earlier. I told you I was going to, but I had a lot of technical problems here today with our show. And so I had to spend that time doing that and getting ready to go. But I'll go back and listen to the recording for sure to be able to comment on it. But Pitmunk asks, he's one of our good viewers and brings a lot of people into the community, Anton. He says, when do y'all think, I think he missed the first part of our show because of the Spaces that he was in. Yeah. When do y'all think of the next bull run will kick off and what might be the catalyst? I think it's already kicking off.
Yeah, I agree. I mean, from my perspective, we're in a bull market at the beginning. Sorry, at the beginning of a massive bull run is going to be amazing. Liquidity is going to come in. One of the vehicles or the tools for that liquidity to come in is going to be the spot Bitcoin ETF. And look, it's going to be amazing. I mean, really amazing. And I couldn't be more excited. What's still not very clear is because I think also one of the questions asked that it's not clear what are the narratives at the moment. Okay, you can argue one of the narratives is DAOs, one of the narratives is real world assets, but we don't really have that firm thing for the coming bull run. And I'll remind you, in 2019, 2020, only in 2020 you had kind of DeFi emerging. One of the first narratives that kind of popping up, and we kind of realized, okay, that's going to be hot. And then kind of NFTs were popping up, and then you say, okay, this is going to be hot, right? But at the moment, if you take a close look, you say, what is hot in the crypto market now? A little bit kind of these L2s, real world assets, DAOs, decentralized physical infrastructure, a little bit, but there's not a lot of strong stuff behind it. So we still need to see what are the narratives, and then the narratives are going to drive the bull run and make them the massive success.
All right, Anton, some good predictions for this 2024. Space Cat says, I think you're absolutely right. There'll be a lot of people happy by the end of the year, and certainly by the end of the next 2 years. I certainly hope so. This bear run, I'd say a lot of the people in the crypto market now have got into the market during the bear run or bear market, so they are pissed off and unhappy. But hopefully they've been DCAing and loading up, lowering their average price, so that when the bull market kicks off, they can benefit accordingly. Pedro, you got any last comments here before we sign off? We had a good show today, but
definitely. Well, first of all, Anton, it's always a pleasure having you, man. You are a wealth of knowledge. I love it. I absolutely love it. You need to come on more so we can politic more. When it comes to Bitcoin, we are selling off below that 89 period moving average, and looks like we're going to be testing that 39,100 day period moving average here. So with that, it's like I talked about, I expect to see if we start to have a lot of volume step in off of this as we continue throughout the day, especially into the Asian market, then expect this to go even further down to these lower levels, because you can see here that it's half day already. And we're just starting to pick up steam here. And looking at my charts for the CME here, there's actually a lot of sellers starting to step in here. So it's really interesting to see what's actually happening with this current market. So it's going to be really interesting to see right now if we do start to see a sell off here. I'm shocked that they're pushing it off the first thing Monday here. So I would expect some type of rebound off that 100 day period moving average, like I talked about, because we're doing a sell off first thing Monday, right? Hence, then we'll see a rally probably back. Tuesday we'll see it go kind of sideways, and then Wednesday and Thursday we'll see it come back and test that 8 period moving average. So look to see some type of movement off that 100.
All right, well, we're finishing the show with Bitcoin crashing, and I did not get short on it at all because I was busy dealing with my technical issues. I should have listened to Pedro instead of worrying about the video.
It's all right. It's all right.
Well, Anton, it's very nice of you to come on the show today, and thank you for greeting all of our viewers so well, and thanking them, and of course answering their questions. We have a good crew that comes in here and asks a lot of questions. So all of you that joined later in the show today, we tried to start earlier on a different platform, but I had technical difficulties, and so we had this nice conversation here on StreamYard. Not all the usual bells and whistles, but we had great content today. And which is actually more important than all the bells and whistles that I like to have, even though I miss my sound effects. But anyway, Pedro, thank you very much for today. Anton, let's see, I like this one better. Anton, thank you very much for today. And Anton, I've dropped in the comment section here a link to your LinkedIn for all of you viewers that want to follow Anton and get all of his daily posts, good and bad. Please find that link Daryl, thank you very much for that. Appreciate all the comments. As we know, the comments drive engagement, and the YouTube algorithm loves that engagement. And so I'm going to try and take us off here with my credits here, if I don't blow it. But Anton, thank you very much. Pedro, thank you very much. Once again, my name is Tom, otherwise known as Striking, here on the DYOR Media Network. Have a good day. We'll see you tomorrow at 12 o'clock noon Eastern Standard Time, 6 p.m. in Europe. Later.